Hi everyone, welcome back to the US CPA FAR classes. Yes, financial accounting and reporting classes. In this particular video, we'll be discussing in detail about conceptual framework and standard setting chapter. That is your chapter 2. And in this particular chapter, you can expect around 25% to 35% of your exam would be coming for FAR. So in this video, I'll be giving you the complete overview of chapter 2, that is conceptual framework and standard setting. So let's dive into it to understand more in detail. So let's dive into the syllabus section. What all we need to cover in the entire FAR. One second, let me jump into the another file for you. Can you all see my screen? This new book. Is it visible?
Yes, sir.
Yes, sir.
Okay, so now if you see, these are the 4 chapters, and now let's dive into one by one the details which we are planning to cover in next 12 week or 13 week from now to finish off this FAR, right? So first one will be conceptual framework, standard setting, and financial reporting. That will be 25 to 35% of your exam. First topic, if you see the conceptual framework and standard setting, in that we'll be understanding both for the business entity as well as for the non-business entity. What is the financial reporting framework? Financial reporting framework include, like your financial statement, your balance sheet, your profit and loss account, your statement of equity, your statement of you can say other comprehensive income, then your you can say cash flow statement and notes to accounts, right? So here in this 2.1, we'll be understanding high level overview of the respective framework which is being used for the business entity as well as for the non-business entity. And then we'll be discussing in detail about the standard setting by the FASB for the business entity and standard setting by the FASB for non-business entity, which is like NGO, trust, societies, or maybe the government bodies, right? Then second topic we'll be covering is the general purpose financial statement for profit business entity. So there are 2 category of entity. One is for profit, which is like business entity, and the second one is not for profit, which is like trust, society, or government agencies, right? For general purpose financial statement for business entity, we'll be covering the balance sheet, what all comes in a balance sheet, statement of financial position, right? Income statement, or you can say statement of profit and loss account, and then statement of comprehensive income. This is something I'm not sure whether you have studied in India or not, but this is something new you'll be studying as a comprehensive income. There are 5 components which you need to consider to be other comprehensive income part. So we'll be discussing that also. Then change in equity. So, or you can say equity statement. Here you'll be understanding, like all category of, you can say share capital, whether you are common stock, your preferred stock, your convertibles, right? And then your profit and loss, accumulated balance of the profit and loss, and the movement in that. So we'll be covering that in the statement of change in equity. Then after we'll be going through the statement of cash flow. In the cash flow, we have like both method, direct method and indirect method of preparation of the cash flow. But most prevalent method is indirect method for statement of cash flow. In the indirect method of statement of cash flow, we'll be understanding all the 3 categories of the cash flow, which is operating activity, financing activity, and investing activity. Right? And here also we'll be covering how it is being slightly different than how we prepare like cash flow statement in India compared to US GAAP. Then after notes to financial statement, what all things you need to keep in mind when you are drafting the notes to the financial statement for the respective accounts. Then lastly, we'll be covering consolidated financial statement. You know what is consolidated financial statement? You have any idea what is consolidated financial statement?
Sir, where all the information has been, reflected into that particular financial statement, where notes to account, everything is covered into that particular section.
No, answer is no, Kashish.
Uh,
Anyone else would like to add?
yes, sir. Financial statement of a group.
Yes.
So having multiple locations and all.
Yes. Go ahead.
Basically, consolidated financial statements is those which
सर
present
ये हाँ
financial.
आपने सर आपने बताया था ये ऑडिट के टाइम पे ये
Mm-hmm.
so where all the all the audit have been done into different locations so
Mm-hmm.
so like
Yes.
the result of or the combination of all the
Mm-hmm.
financials would have been into that particular
Mm-hmm.
statement so
So it's basically where the financial statements of all the subsidiaries, associates, joint ventures are consolidated into one financial statements presented as a group. That's consolidated.
Yes, absolutely true. Look at like company like Amazon, right? They are being, formed in US, and then when they expanded the business in the different country, they have opened up like subsidiary or joint venture in the different country based on the requirement, local laws requirement of that particular country, right? So Amazon have a company in India, they have company in US, Canada, Mexico, Australia, New Zealand, Scotland, Ireland, China, Hong Kong, right? So when they are making a consolidated financial statement as a group, right? So they need to add the financial statement of all the countries to make it a group financial statement that is called consolidated financial statement, right? Next topic, which is 2.3, is the general purpose financial statement for non-governmental, not-for-profit entity. So if you see the difference between business entity and not-for-profit entity, you will see the statement of financial position is same, that is like balance sheet. But second is you see statement of activity. It is not statement of profit and loss or income statement because it's an NGO. It is not for profit organization, right? So there should not be any profit and loss account. There should not be any profit and loss statement. Here, the statement would be only the change in activities, right? So there are certain activity which is increasing cash inflow. There are certain activity which is decreasing cash flow, right? So instead of revenue and expense, we'll call it activities. The next, if you see, there is no statement of comprehensive income because that is being required for the business entity. For non-business entity or not-for-profit organization, there is no income, hence no comprehensive income statement is required. Third thing, if you see, the statement of change in equity is also not there because there is no equity at all. Hence, there is no change in statement of equity required. But cash flow is required in the same way direct method or indirect method, and most prevalent is indirect method. What all three categories we explain in the cash flow statement? Operating activities, financing activity, and investing activity, right? And then notes to financial statement will be there, and consolidation is not required because it's always be an independent, it's not a business entity, right? So hence you see there are only four statements: statement of financial position, statement of activity, statement of cash flow, and notes to financial statement for the not-for-profit or NGO kind of organization, right? Next thing is public company reporting requirements. So any of you have audited any listed company or being part of the listed company of USA? Any audit engagement or accounting or any other profession you are doing?
Yes, sir.
So
I
you might have heard about 10K, 10Q. Have you heard about this term?
10K I've heard, 10Q or 8K I've heard.
What is
but
Yeah,
10K?
10K is yearly statement and 10Q is quarterly.
Yes. So annual financial statement which need to be submitted to the Security Exchange Commission for a listed company is required to be filed in the form 10K, right? And the limited review and quarterly review statement, which is required to be submitted to the Security Exchange Commission by the listed company, should be in the format of 10Q, right? And then another form you will be seeing here is 8K. 8K, when there is any significant event in any organization which is being listed, they need to inform that event to the Security Exchange Commission. That information will go to the Security Exchange Commission in the form 8K format. For example, if you are planning to acquire any company, if you are going for a merger, if there is a change in director, if there is change in, you can say, audit committee, if there is change in independent director. So all those key information which is relevant for the business as a whole or for the corporate governance of the organization, that you need to inform to the Security Exchange Commission in the form called 8K. Make sense?
Sir, 8K should it also involve like if there is a change in any accounting principle as well? So that is also...
No, that will come in 10K and 10Q, depend on
Okay.
which reporting period you are filing.
And
But
sir, one more thing कि 10Q में सर हम audit नहीं करते थे ना क्योंकि वो quarterly base पे होता था.
no, 10Q is review, 10K
10Q
is audited.
हाँ 10K क्योंकि वो annually होता था तो audited होता था वो.
Yes,
Okay,
absolutely
got it.
true. Then segment reporting and earning per share, you need to disclose to the SEC. Now coming to topic number 2.5, which is financial statement of employee benefit plan. So as a CPA, we should know the accounting of employee benefit plans also, right? What is employee benefit plan? Any idea? Any idea what is employee benefit plan?
Sir, can we take it as ESOPs?
No, ESOP is separate.
Okay.
Employee benefit plan, like how you have pension plans or contribution plan in India. Same way in US also there are separate NGOs or some insurance company. They run the employee benefit plan for different organization. For big company, they generally have their own defined benefit plans, but that is being run by a separate NGO coming under the same group. Right? It is never ever be for the profit organization. It is always be a not-for-profit organization, right? In which like employer and employee deposit certain percentage of their salary and wages for the benefit after the retirement, right? That can be the contribution plan or that can be a defined benefit plan. So contribution plan, generally company pay to the insurance company and that insurance company maintain that contribution plan for the employer. Defined benefit plans are generally internally separate NGO comes under the same group in which the employer take the responsibility for the investment. We'll be discussing more in detail, right? How to do the accounting of those employee benefit plan, you'll be studying under the FAR. How to do the audit of that, we have already studied in the audit classes. Or like the people who are joined new, so you'll be studying auditing in the audit section, accounting in this FAR section, right? Next one is special purpose framework. So special purpose framework in US for, you can say, individual who are sole proprietor, or you can say the partnership firm are being allowed to consider their accounting on cash basis also. Whereas for the corporate, it is mandatory to follow accrual basis accounting, but individual and partnership firm, they can choose cash basis of accounting also. So if your client is individual, how you need to do their cash basis of accounting, that you'll be understanding here. If your client or if you're working in a partnership firm, they have chosen cash basis of accounting, then how to do the accounting of that firm, that you'll be learning here, right? And then this individual or the partnership firm can choose income tax basis of accounting also, right? That is more cash basis of accounting, but only few things are accrual basis, which is your account receivable and account payable major. So not much different from cash basis of accounting, but income tax basis of accounting. So that also you can choose. Why? The question arises why, right? The why part is in US, audit is not mandatory for non-public company, right? Only for the public company, audit is mandatory, and that is requirement of Security Exchange Commission. But for the non-public company, for the sole proprietorship, partnership, LLP, LSC, S corporation, audit is not mandatory, right? As audit is not mandatory, then why they need to make an account on accrual basis? So they have given a choice. They can maintain their account on cash basis, tax basis, or accrual basis. That's completely on the choice of the entity, right? But why they need to follow any basis of accounting? Because they mandatorily have to file their tax return. So tax return filing is mandatory, but audit is not mandatory. As they need to file the tax return, in the tax requirement, either they need to follow income tax basis of accounting, cash basis of accounting, or accrual basis of accounting. All three bases are being allowed for the tax purpose. That's how that's the reason you'll be understanding what is cash basis of accounting and what is income tax basis of accounting. Then lastly, you'll be understanding the ratio analysis. Do you remember ratio analysis from your school day or college days? What all type of ratio analysis you have heard?
Liquidity, solvency, asset ratio,
Asset turnover ratio, so creditor turnover,
Yeah, turnover ratio.
debtors turnover ratio.
We learned that in auditing as well. There was a section
Yes.
on that. Yeah.
Yes, this topic is common in 3 subjects. Ratio analysis, once you study either in accounting, it will be same in audit, it will be same in BEC also. If you have studied in audit, it is same in accounting and BEC. If you have studied in BEC, it is common in accounting and audit. So this topic is very much common, and you will get 1 or 2 questions in all the 3 exams. So that's a good part of it. So in the ratio analysis, like solvency ratios, which include, like the liquidity ratios, or you can say quick ratios, or current assets ratio, all those things. And then turnover ratio, which is stock turnover, debtor turnover, payable turnover, right? And then you have, profit calculation ratio, which include, like debt equity ratios. All those things will be coming in the ratio analysis. That also will be studying in detail. But once you studied in either in FAR or in audit or in BEC, it is very much same in all the 3 exams. And lucky you are getting at least 1 or 2 questions in all the 3 exams, right? So this is all we'll be covering in chapter 2, which is Conceptual Framework, Standard Setting, and Financial Reporting, right? Any doubts so far, or anything you guys need more clarification? So far so good for chapter 2?
yes, sir.
Yes, sir.
Okay.